Empire Manufacturing at 6.17. That is a really low reading compared to economists' estimates of 20.25. But retail sales, that's where we're focused on, down more than expected. Matt, you've got a breakdown of the numbers.
That's right. And you know what? We were expecting some softness, as economists put it, in retail sales, especially after the big number that we had last month. Economists were looking for a gain of about 1/10 of 1%, or rather a drop of 1/10 of 1%, because of a reduction in prices for things like gas, which often boosts retail sales, and things like building materials, which were the big gain, or one of the big drivers last month. Also, one of the big drivers last month was auto sales, and auto sales this month were fairly subdued. So that's why we expected softness. Not this much, though. We got a 0.3% drop, which was more than had been anticipated. If you remove auto sales, which a lot of people like to do to kind of smooth out the lumps, you see a loss of about 0.2 of 1%, whereas economists were looking for a gain of 0.2 of 1%. So doing a little bit worse than economists had expected, though we should point out that we have been doing better, or at least in line with what economists expected. Last month, a 0.6% gain in August was also followed by revisions for prior months, and it was the best that we'd seen in about half a year. So we have seen retail sales doing fairly well now because of the falling oil prices, and this is the kind of thing that's going to come through and affect a lot of these economic numbers. You're seeing a drop in the retail figures just because the consumer spend is lower. Now, consumers are going to be able to spend more money on other stuff because they save money on gas prices when you see that starting to come through more. But right now, we're seeing a disappointment in retail sales. So you'll see that play out today, or we'll watch to see that play out in the equities market.